Welcome to the Debt Doctor podcast, where we deliver the definitive prescription for navigating distressed real estate debt. I'm your host and America's most qualified debt doctor, Bill Bymel. I've spent my career investing in, diagnosing, and reviving thousands of distressed real estate situations. The Debt Doctor prescribes proprietary remedies to help you identify, acquire, and monetize undervalued real estate assets. Each episode gives you insider access to the strategies top cohorts use to transform market volatility into double-digit returns. If you enjoy what you hear today, hit the follow button, subscribe so you don't miss an episode, and please share your support with a quick review. You can find me on the web at billbymel.com. Thanks for joining this episode of The Debt Doctor. Good morning, good afternoon, and good evening. I say good morning, good afternoon, and good evening because no matter where you are in the world, I believe you have something to earn and something to learn from being a member of the Debt Doctor Society. My name is Bill Bymel. Welcome to the Debt Doctor podcast, where we have intriguing conversations about real estate debt, and other types of debt. We'll have conversations with cohorts in commercial real estate, in residential real estate, in financing, private equity, investors and family offices, and we'll just have conversations that are episodes of interesting stories about debt situations. After all, debt seems to be a major conversation these days, not just on the individual level, but also on a global scale. As you know, the U.S. Debt is over $30 trillion. I remember when I was in grade school and it first passed the 1 trillion mark, and what the conversation was like back then. We'll talk about things like that. But today we have a special treat for you. We are going to share with you a replay of a webinar interview I did with my friend Kamil Homsi, a global investor, member of a Middle East family office who lives in New York area. And Kamil and I get together every year and usually have one or two great conversations about macroeconomics, the global economy, the impact of geopolitics, and whatnot. So at the end of 2023, we sat down for a conversation. The reason I'm replaying it for you is some of the conversation is still prescient today, and much of what Kamil said was predictors of what would happen in 2024 and what would be the impactful considerations that we in the business and world have as we enter 2025. I hope you like what you hear on the Debt Doctor. If you do, please subscribe, share with friends, and leave a comment or a good remark. Again, thank you for listening to The Debt Doctor, and we hope you enjoy this episode.
United States and China, they are the two big, I call them elephants. They are not a gorilla, but they're huge. And they are really today the two factors that are shaking the world. So every region that I mentioned has been impacted heavily by COVID, and also by the rising interest rate in the United States, which was a policy in order to contain inflation. So the world is recovering. Now, Southeast Asia is recovering because also they had the finance, they had China by them, excuse me, and they also had access to the vaccine, and they had access to liquid, so they can supply the masks and the gloves and the sanitizers and all other precautions to their citizens. While in Africa, till today, we do have a short list of countries, they never had access to the vaccine.
Wow.
Yes, they did not, for several reasons. One reason is the United Nations designated India to be the manufacturer licensed of the Zeneca and of Johnson and Johnson, Pfizer, and the other one.
Oh, I did not know that.
Right. So India was hit twice, and they closed the economy for almost 8 weeks. And in a country of 1.4 billion people close down the economy, supply chain is heavily impacted. So India was producing vaccine for its own people. So the African countries designated, and some of the South American countries, they were on a waiting list. And at the same time, the three rating agencies in the United States, they downgraded the rating, the credit rating of many countries at the beginning of COVID, which is something not much of our, God bless it, our mainstream media that became a joke of the world, never even bothered to mention. Because what that mean, as you and I know, it hinders the ability of those countries to pay their existing debts and to ask the IMF, the World Bank, the Paris Club, and others for more borrowing so they can buy the vaccine and buy those supplies. So that was like a double whammy. I mean, it hit them both sides.
Right.
Until today, they're having a hard time to revive. As they started, they were hit by the ripple effect of the Russian-Ukrainian war and what that meant for them in creating short supplies of energy, of urea, of fertilizers. So they can't even produce their own wheat, corn to make bread for the family, which is like the basic element of every house. So South America, again, it was divergent, meaning different countries based on its circumstances and its size, where the Middle East was helped because of the oil production. So the economy did not stop because you don't need to taste the fuel or the oil or the crude and also put it on tables, but it's still, they were financially hit, and that created a lot of slowdown. Now I jump to the Europeans. The Europeans, most of them, if not all, they were heavily impacted economically by what's going on in Ukraine and Russia. Again, due to their many years of dependency on minerals, on energy, of all type of energies from Russia. So, I mean, who would expect that the big economy, the largest economy, and really the backbone of the European economy, which is Germany, to 6 months ago to go into a recession? I mean, for Germany to go into a recession, it's not only because of the war, it's also because of the bad immigration policies that were created during the tenure of the last tenure term of Angela Merkel, where she opened the borders and she said everybody is welcome. Well, we say for many reasons. I mean, people in the Middle East, they say, well, because the Germans are not making enough babies, they need outside labor, they need skilled labor, which is true, but not to open borders. And that open borders will later make us talk about another open border that's not far away from us. So those are bad policies that also caused the European countries to be suffering today economically, paying high prices and not affordable for their people of energy. In addition to what I mentioned earlier about the changes in Africa, and that will limit the supplies of a lot of minerals that fuel the industrial machine of Europe.
Can I interrupt you for a second? Let's go back to Asia for a minute, because we know Europe has its own set of issues, and a lot of that, there's both economic and political unrest amongst the European countries. But I don't want to step over Asia, because it seems like, China being the big dog there, where is their economy at right now? Because I think that there's for a while they still have growth, but I think it's always like, oh well, if they have less growth, that's actually really bad. Or where's China, and then where is that comparative to some of those other Asian countries? I heard Africa's in Europe are in trouble, but where is the state of China right now going into 2024?
Bill, China was hit by two major headwinds.
Mm-hmm.
One of them is COVID hit them twice. The second one was even stronger than the first one. So the government came to a standstill, which they called the zero tolerance. They closed the economy completely. That not only hurt the economy of China, the people of China, but that also disrupted the supply chain of the entire world. And we know, I mean, we don't have to go far. Go into
Right.
Walmart. Go into Walmart. Everything inside, including the cash registers, including the tile on the floor, including the lighting illumination devices, and everything on the shelves is made
Yep.
in China. And Walmart has, we know, 2.2 million people working there. So we don't want that to be disrupted. The second one was the fact that due to change of policies and to the protracted war of Ukraine and Russia, it cleared completely to the West that China is an ally of Russia. So immediately, United States and the Europeans, they changed policies toward importing and relying on China as a source of a lot of the supply chain that they need for their economy, opening up to other countries, Indonesia, Vietnam,
Right.
and Thailand, and many others. They will take some time because they are not scalable to compete with China. So China was hit with second, and then they had a major internal oversupply of real estate in the country. Those countries, if you remember, I think we spoke about this in one episode in the past. Those companies, they were all financed by government subsidiaries. They called them banks. We call them the China government. Because China, at the end of the day, you think Ernst & Young and KPMG are going there to audit? Right. Nobody can audit. Right. What they tell you, you take for face value. So their accounting is cooked all the way. Right. So that created another problem of oversupply. There are provinces in China where they're knocking down high rises because they are never occupied. Yes.
So that's still going on. I remember we did report on that 2 years ago or something here when we looked at some of those ghost towns. They're actually going and knocking them down. I guess that's another way to put people back to work, right? go demolish the empty buildings. You just put them to work to build something.
You're absolutely right. Absolutely right. I mean, China now is back to a growth rate of about 4.6 to 5. The last two times you and I spoke, they were between 7 and 9%.
So it's bad for them then.
Oh, it's like they dropped like 50%, and they are not out of it. So their current government, they are aware of this. And look, China is not a country that is going to go by the wayside and thrown in the trenches. No, it is they restructuring their economy completely. Mm-hmm. You know them, they do things quietly, and in the past we called them the turtle. And that turtle walks slowly, right, but effectively. So
so it sounds like the beneficiary of some of that, of the geopolitical aspects of our relationship with the West, with China, is that the other Asian nations, Philippines, Vietnam, Thailand, Taiwan, Indonesia, are all the beneficiaries of some of that additional. So we're seeing some shift of into those markets. So that's good to know. Okay, well, I'll make sure I let the Vietnamese know that when I visit there.
Well, if you want to see an example of that in North Carolina, the government is now in partnership with a conglomerate from Vietnam to manufacture EV vehicles and also agricultural equipment in North Carolina with with 50-50. It's the pari passu capital. So imagine Vietnam, the country that when I was growing up as a child, I mean, we saw bombings and Viet Cong and Napalm. And now
Mm-hmm.
we're seeing Vietnam, the country. I mean, I've been in Saigon about 2019. I
Yeah.
mean, you see high rises. You don't see the black and white that we saw in the 60s and 70s. So this is one of the beneficiaries. Indonesia, definitely a country of 265 million people and about like
Yeah.
3,000 islands. They are also on a short list to back up what China will be given up. So China now, just to close on China, they are focusing on heavy equipment and
Mm.
also maintaining the leadership in EV production. China today produce more electric vehicles than all the other countries collectively.
Wow.
I mean, I just came from a long trip to Asia and the Middle East, and I see brands, and I tell the driver, "What kind of car is this?" "Oh, this is from Korea." "Oh, this is from China." And that one, "Oh, that one is also from China." Like
Wow.
acronym names. QYS is a brand. He said, "Oh, this one is Uber. Uber drivers love it." I'm not saying superior, but they are definitely less costly than
Wow.
Tesla, than Benz, than Audi, than Volkswagen and Toyota.
Good to know. That's
Okay.
very good. Okay, good. So let's shift out of Asia and come back to the West and talk about North America. First of all, before we jump into North America, in the last few weeks, there's been huge news in Argentina. And I wanted to give a shout out to my Argentinian friends. And I actually spent Christmas in Buenos Aires last year, my first time ever in Argentina. But it was quite an interesting experience. A year ago, there's like two markets for money. There's like, three markets for money. There's cash markets, there's credit markets. Literally you go into my experience of being in Buenos Aires was you'd actually have two prices for everything, a cash and actually three: American dollars, credit cards, and Argentinian pesos, So but do you have any quick updates for the world on what's going on in Argentina, and then we'll move to the north?
Beautiful. Great question. Bill, I'm like you. I've been several times in Argentina. And also, I have immediate family, brothers of my dad, and first cousins that live in the north, in the region of Tucumán. The uh, uh, Last week we were in Miami during Art Basel.
Mm-hmm.
And wherever I am around and people gather, big table, and these same questions, come up. And I told them, I said, look, it's great that this president is an economist, but the best leader is an entrepreneur that hire economists. I will be concerned if an economist think that I am self-centered, I know that all, I belong to the following theory, and I'm going to do the following. I prefer, when we are to make a transition, is to use diplomacy and to be more of statesmen and stateswomen, if there is a term, to take the country through transition after 50 or 60 years since Juan Perón, since socialism was imported into that beautiful country called Argentina. Argentina is not only Maradona and Messi and soccer. It's a great country. It's a fertile country. It has resources underground. Like I said, fertile, I mean, wine, Mendoza, we all know about this. Definitely the cattle. They are one of the largest cattle exporters to the
Right.
world. And their cattle, by the way, most of it graze on grass. They
Mm-hmm.
are not, fed corn and fed
That's right.
soya and all that stuff. So their quality even superior. But there has been, with socialism comes corruption and comes centralized government where the people are just like, Monday to Friday and no hope and no future. So this guy came in and he said he want to dollarize the country, which I prefer, again, transition. Poland tried that, and it is still today testing it. So it's almost like close to 10 years. So they
Right.
still have, in Poland, they have the zloty and they have the dollar. And a retailer, when you and I stop there to buy whatever chattel that we need to buy, They have a calculator and they say this is the conversion rate. You can pay by euro, you can pay by zloty. I prefer that for him, the economist. The second thing the economist said that, again, it worked counterproductive for transition is from day one, he said, I am not going to join BRICS. Like, you don't have to say it. Korea didn't say it. Thailand didn't say it. Malaysia didn't say it. Most of the oil-producing countries in the Middle East, they didn't say it. They said, we're going to do business with both. So Algeria today, who favor friends with the BRICS, but they also are now the main supplier of oil to Western Europe because of the proximity to replace Russia. So, but they are also good friends with Russia and with Ukraine. I prefer for countries that are not the head of the polarity to play the card on both ends, because they have to take their people from developing to developed. And that's what I ask of the leader of Argentina. We can talk about Argentina for a whole hour, but I hope this answered. I think he is rushing the matter of aligning the country where the country need every friend possible to make the transition successful. That's all.
He's the idea being severe austerity. They're cutting back on government subsidies, basically. And we'll see what happens there. So keep an eye on that for those that we just wanted to, bring that up because it's something for everyone to watch that. Let's go ahead and move over into the North America. And the most important thing is we want to talk about commercial real estate in North America and the US. And that's what we'll spend the rest of this hour doing. Do you want to talk first about capital markets here in the US, bringing it full scale, knowing that the dollar is the reserve currency, and where we are today compared to, a year ago?
I mean, definitely a great question, Bill. And it is time to talk about the United States, because at the end of the day, we live here and we raise our grandchildren over here. Excuse me. The United States,
children, by the way, are always the better ones, right? Those are the easier ones, the grandchildren.
True. The United States, like everywhere else, we were hit suddenly by COVID with no knowledge, with no preparation. We didn't have vaccine. We didn't have ventilators. We did not have specialists. We did not know. We were just like, in a goose chase, running from one side to the other, not knowing, flipping on decisions, flipping on opinions. And there were rough days. After COVID, we had the enforcement of the vaccine and the resistance. And then we were hit by the inflation. That was, again, people know that it was the premature decision to completely come across in policy against fossil fuel, as it is the core of every economy. No ship is going to cross the ocean. No house will be heated. No plane will fly without fossil fuel. So I believe in transition. I believe in green and clean energy before we reach green energy. But it seems that the people in Washington, they came up with different ideas that are not smart ideas that caused inflation in the world.
Well, the printing of $3 trillion and handing that cash out to every American or that wanted it was really, and it's really 6 trillion when you really add it all up. But it's the printing of money that we've talked about over and over again, right?
True. I mean, not only one administration, because COVID had survived the last year of the previous administration and then the new administration. So it's not like one of them is exonerated innocent. No,
both administrations.
Both of them, they made major economic mistakes. And the only way I can think of them is that they have no ears. because when you are in leadership, the true leader is the one who listens.
Mm-hmm.
And then, then based on narrowing the consulting, you come up with the right decision and take responsibility for it. But these guys, they came in and just like randomly, okay, I'm going to do this, I'll do that. I will do this to reverse what he said, what she said.
A lot of
Meanwhile,
reactionary action.
we are in a country today, we are reaching 340 million people. You work for us. You don't work to despise Mr. X and Mr. X to Mr. Y. But again, that's again a long conversation that one need 3 days. So so we then after that, I mean, Jerome Powell as I always call him by the name because not too long ago I said he is the victim of the Congress, and someone said no, he is not. He is also a bad economist. I don't think so. But central banking in the United States was created by Congress. It's very important for the audience to know that.
This is
when they tell us in school that they are two separate independent entities, no. One is the son of another. And through the history, through the 20th century, the central bank that we call the Fed Reserve, they were revised, they were restructured twice. So by whom? By the Congress. So when the Congress decide on irresponsible spending, printing programs that do not make sense, okay, and while their duty is to serve and create programs for their constituents, the ones who voted for them and the ones who did not vote for them, that is democracy. So by not doing that, they go to Jerome Powell and say print. So that separation or that disconnect between monetary policy and fiscal policy is what created where we are today. An outcome of that was the failure of the banks, starting with Silicon Valley Bank, and then Signature, and then First Republic. Well, okay, they were mismanaging their banks, but where is the government? Where is the regulator? Where is the auditor? How often do you check their books to see if their reserve, if they're lending, if the investments that they are making are in line with protecting the interest of the consumer, who is you and I? And all that led us to where we are today. We are dealing with court cases of people that were negatively impacted by those vaccines, and now Pfizer and others and the others, Moderna and Johnson and Johnson, saying, yeah, you're right, we rushed it, but you did sign a disclaimer when you took the vaccine, so you cannot sue us because the government protects us. A lot of things happening today, and at a point where we have now a strategic things happening in 2024 called the election.
Okay.
This is going to be.
Get your popcorn ready.
I say to them, one is fighting out of court, but he is leading wherever I go. And then the other ones are fighting afraid, them and their backers, from him coming back. And this is reality. We know who are the two candidates.
Right.
We know that the incumbent want to run, even though some of our good friends in recent interviews I saw on TV, people that you and I know in the business, they said, we suggest for the old man to step aside and leave with a legacy, because he has the lowest rating since, I think, God knows, since 500 years ago. This guy, him and his administration doing a lousy job.
You just never know what's going to happen on either side. I guess maybe there's some rabbit that gets pulled out of a hat. The problem is last year when we talked about this, there was one war in Ukraine, right? And that obviously isn't going away. Now there's two wars going on, and then we've got an election year coming. What's the effects potentially on our, let's try to, rather than try to prognosticate to what will happen politically, what will be the effects on the economy? What is the government going to do or not do and what's going to happen in the economy as it relates to real estate too. I mean, is there more signature bank coming? More of these, more failures coming? You mentioned you pointed that out brilliantly, that that I know from for personal conversations with people that work for the federal government, that no one saw those bank failures coming last spring. You had Signature Bank, Silicon Valley Bank, and First Republic, two or three of the largest failures in U.S. history. And when a bank fails, more often than not, the regulators know 60 days ahead of time. None of that was true with those banks that failed last spring. What are the potential? I mean, what could potentially be on the horizon here when it comes to banking, capital markets, and real estate?
Your question is well packed. So
we only have another 17
simple,
minutes, Kamil. So let's speak.
in a simple example, when two kids fight in school, we don't go to the other parents. We go to the principals and say, have you been watching what the kids are doing in the backyard? Are you watching those fist fights? Now, when the banks fail, I hold the government and the agencies that regulate banking, I hold them responsible. I say, you did not maintain oversight. You're getting paid for oversight. You're getting raises for oversight. You have pensions and you have benefits and you have secure jobs. To maintain oversight, you were not doing your job. You did not protect the public, not in California, not in New York, not elsewhere. Bill and I, we know the numbers. We know how much was left that was not even taken by Flagstar Bank from Signature and others. And the news, every media had put it in on their headline. But going back, I did not mention the war in the Middle East, because if there is a big problem in the world today, it's what's happening in the Middle East. Whatever is the outcome, okay? A lot of changes are going to happen in a lot of different governments in the world, not only in the Middle East. It's because it's becoming a humanitarian thing. Where is leadership? Okay, where is leadership that will come in for reconciliation? I'm not saying forgive the assailant. I'm not saying exonerate the person who created a mistake or made the Israel side, the Palestinian side. It doesn't matter. Who came as a leader to say, hey guys, we have to come up with a solution permanent to protect every child, to protect every woman, to protect every soldier from this happening again, and just enjoy life, because what is going on is not acceptable for everybody.
We talked, that's obviously not a topic that we can even get into today. But
no, we can't, because it is it's so complicated. It's the best not to talk about it today.
Well, you made the one good point, which is leadership on both sides, or it needs to be,
absolutely. How would that impact the economy here in the U.S.? And then we're going to stop to talk about commercial real estate in the next 15 minutes. The war in Ukraine created an appetite for investors from all over the world to migrate to the United States. That increased the valuation of the US dollar in the Forex market, in the currency market. But that has a negative impact on exporting countries, because now we have to adjust the valuation of our products when we send it to America. So when you see a product that's a piece of vegetable that is not in season at Costco, I like to always go down with my examples to the street to be realistic. When you see that avocado, you say, well, it was $3 for $2 a year ago. How come now they are like $1 for $2? Well, because this is imported. The exporting country that they import from the US, they have to pay more for what they import because of the new valuation of their money. Their money did not change in value. Their reserve did not change, but the demand for the US dollar increased the valuation and the demand on the US dollar. And it's not a simple formula,
Right.
but the US consumer will pay for it. You will hear on the news, and it could be true, that the inflation today came down from 8.6, I think, at the highest. Now it is around 3.9, between 3.9 and 4.1. That can be true. Now, the unemployment numbers are a big question because there are factors considered and factors not considered. The cyclical, non-cyclical, part-time, the ones who left the workforce, all that is a different conversation. But the inflation is that increasing the interest rate did curtail the inflation growth. Yes. Did it cause it to recede? Yes, it did recede. Yeah, but was that the only card in the hands of the Feds or Jerome Powell? No, because it takes three different departments to maintain that economy. And there is one department that is never mentioned when it comes to responsibility. We always say monetary and we say fiscal. Fiscal is the Congress, the Senate, and the White House, and the monetary is the Feds. But there is one that the Department of State, because the Department of State job description is not to travel from one state to the other to say to this guy, be nice, to the other guy, don't be nice. No, you are the trade ambassador, that we are a producing country. We are leading industrial country. We are in business not only to consume internally, but also to export, to reduce that balance between import-export, which is one of the several variables in the formula of calculating GDP. So I don't see them doing their job. Not this foreign policy, not the one before, and the one before, even before that. When the one who was the head of the foreign policy during Nixon, he is not the one who created the dollarization of the world. It was the other guys, Robert, McNamara, okay, Spiro Agnew, and the others. And foreign policy with monetary and fiscal they must hold themselves responsible to bring this economy to where it should be.
Does that shift in cost of capital, the US dollar, also, how does that convert to real estate purchases? Because, we've obviously seen Florida still going through the roof. For a long time, Florida was held up by the foreign buyers, who kind of went away in the last couple of years because of, both administrations kind of shooing them away for different reasons. But obviously Florida internally benefited from COVID and everyone. So, what's the effect? We got to spend the last 10 minutes talking just about real estate here.
I agree with you.
So what are you seeing? Where are you seeing the opportunities? Where are you seeing the cracks? Where are you investing in real estate? Are you selling real estate? What's all of this? What's the effect for those that want, that are looking at the next 2024, whether from an investor's point of view or what to expect from an opportunity point of view?
Bill, from a foreign investor perspective, we are a long-term, long-hold capital preservation and growth. So we are not sellers, and we invest in the United States to maintain legacy and also for a succession and transition for the next generations of the family. And so does every established family or generational family.
But I just want to interrupt and say that's the golden rule, by the way, for everyone. Buy and never sell is the golden rule in real estate, really. Especially
in these circumstances, or in the, like, for example, when I started building the portfolio in the US started in 2010. And some media used to say commercial real estate in America is on sale. And we bought everything. The conversation was not what the cap rate, okay? What is the price per square foot? And we compare it to replacement cost. So we say, I bought it 60% below replacement. So if I'm going to build that building, it's going to cost me $300 a square foot, and I bought it for 70 or 80 or $100. Then I am ahead of the game. So I was buying a bargain. But the impact of the rising valuation of the US dollar created fear in developing and even in industrial countries. I mean, I learned from many different good relationships with law firms that they are registering European, English, and European Union companies or funds here in the US for two reasons. One, because they are afraid of the diminishing valuation of the euro. And you remember there was a period when the euro became at par with the US dollar. And then also because of the overregulation that is taking place in Europe, not only on the finance, but also on the reporting on the ESG and also on the climate participation and also on the measuring impact. Now, someone from South America, a wealthy person that does not believe or understand the valuation or to participate in the digital currency as it is a way to protect. Again, it's very volatile, and it is. We know many reasons not to invest in it. The best is to go and buy commercial real estate in America. So when they will come to Miami or to Houston, and those have been always the main destinations, or even to Southern California, and they pay asking price, and sometimes they compete against each other, and we saw that happening. Why? Because they came for different reasons. They are not commercial real estate investors. They are wealthy people coming to protect their assets and their lifetime earning in the United States of America. That created that kind of mispricing of real estate assets. But if we are to cover thoroughly and in a short period of time, the four pillars of the commercial real estate, which are retail, industrial, office, and multifamily, we find retail is the one who survived the best among those who were hurt, because there are a lot of new brands coming into the market, and because also a lot of the people that over 55, over 65, they're looking for passive income. They look into single tenant. So we saw that happening. So we see that almost every single tenant brand I know, they are expanding. They are expanding with multiple locations. Okay, I mean, there are some that are reducing. They are reducing in order to scale, to reduce their exposure, but they are increasing their e-commerce. Somebody might say Bed Bath & Beyond is closing 100 or 200. Well, they are expanding elsewhere, and they are owned by a conglomerate that own other brands. So the headlines say something, but the inner contents will say something always different. The next thing, we had a solid property type, which was the industrial or the warehousing. Again, we see that now receding a little bit to hospitality, and also we see now more people more attracted to data centers and to life science research centers. One is because of COVID and because all the internet and the time we spend at home, and then we have more demand, and now every meeting is on Zoom, every meeting is on Google or on Microsoft, just like we are doing right now. This is going to some kind of co-location data center that you pay rent for and everything else. Data centers will be interesting to talk about that because we invest in it in Europe and here in the US, and I can speak thoroughly about this from construction all the way to co-location and to put it in operations. Then you have the multifamily. Multifamily has been the baby of every investor, of every private lender, if it is a fund or they are a private company, which Bill is one of the leaders in that field. But right now, Florida specifically is facing oversupply in certain areas of Florida, and it's going to spread. Central Florida is booming. There's a lot of government investments. Their policies have been favorable and favored by those people who moved from the north in taxes and also in being more entrepreneurial friendly. People did not move there because of COVID, because Florida had COVID, Texas had COVID, everywhere else had COVID. So for those who say, oh, we moved there because of COVID, no, you moved there because of wallet, not because of COVID. I hope I covered everything, but there is something I like to share in numbers, a couple of lines that I
Yes.
read from NIOP. Now, NIOP,
Good.
the National Association of Industrial and also Office Park, they say that the combined economic contribution of commercial buildings and commercial assets in the United States exceed 20 between 22 to 24 trillion dollars, the valuation of commercial real estate. They're saying that commercial real estate contribution to the US economy, it contributed 2.3 trillion to the US gross domestic product, the
Wow.
GDP. Also, second bullet, generated $831 billion in personal earning.
Wow.
And the last thing is it supports 15.2 million jobs. So
Wow.
commercial real estate by itself support 15.2 million jobs, and we are short. Developers are short. We invest into developments. You know, the general contractor come to me and say, I can't get enough people. I said, go to the border. He said, those guys, they don't know commercial real estate. They're coming to America to get paid. They're coming to America to get Social Security. They are not coming to work. And that's sad. I will stop over here. I know we are under time constraint. And maybe Bill
Yes.
has more questions. Go ahead.
I really just want to, I think you covered it well. Retail seems resilient and people still want to go socially. Retail needs to shift, but in terms of single tenant, drive through, or certain types of mixed use, that are for the next generation, I think, you're holding. I think the biggest issue that you bring up with multifamily is just the cost of capital. When I looked at multifamily deals the last couple of years, it just was the head scratcher, just like back in 06, when I would scratch my head when that $30,000 a year government worker was given a NONI loan of $1 million on their home. That it was the same kind of head scratching that we did the last couple of years in the multifamily sector when you were going into green and growing markets and modeling to a sub 5 cap on a multifamily deal. And it only penciled out because you had a 3% loan. Well, no, those don't exist anymore. So all that stuff is just, you just got a lot of financial mismatches. A lot of what you're going to hear, the magic word I believe you're going to hear is maturity mismatch in the commercial real estate market, where you've got plenty of good families owning commercial real estate, but you got a lot of guys that have gotten in the game, and those people aren't going to go anywhere. They're going to keep they're going to be fine long term. But anyone who's a player, who's highly leveraged, who has to go refinance, they're going to come up against a maturity mismatch. 2024, we have to go soon. I have my next meeting to go to, and our audience has been patient, but I want one more. I don't finish my webinars without a bold prediction. 2024, what's going to happen? True or not? You can make something up. If it's funny, I'll still go along with it. What's your prediction?
If I agree with the majority of economists on the term that it is a soft landing, in the beginning, maybe 6 months ago, I called them bad pilots because they do not have a pilot license. How could they know that it is a soft landing?
Right.
But the time is showing that it will be soft landing for many different factors. Main two factors. One of them is when the cap rate goes up, all the investors were happy. They said, now we're going to buy things at below cost. But when the treasury also climb up, that reduces that spread. So that eliminates that possibility. The second one is the asset owners, they have been warned since the beginning of COVID that this is the end of that trajectory that existed for 12 quarters, if you remember.
That's a wrap of today's episode of Debt Doctor. I enjoy bringing this content to you each and every week, and I really appreciate you tuning in. Remember to follow us so you get notified whenever new episodes release. If you haven't already done so, please share one of your favorite episodes with a friend, family, or colleagues. And if you don't mind, leave us a positive review on Apple, Spotify, or whatever your favorite listening platform might be. Until next time, thank you for investing your time with us on The Debt Doctor.